Okay, welcome everyone. We'll start our lesson one. Today lesson will go through LO1 learning outcome one. As you know me, my name is June Sutter. Please, if you have any question, drop me at geometryuniversity.co.uk. Today lesson key focus will be our LO1 and quickly, before starting, we'll go through the unit content, what we're supposed to learn. Okay, so let's please hope you can see all the lecture slides also available on our Moodle page. Please make sure the crucial subject So let's please we'll start. So please, you've been given the unit contents here. That's it will go through the unit specification. That's one of the crucial things which we need to always indicate the content what we're supposed to learn. So the lesson one, which is be able to prepare the financial statement, sole trader and partnership, and we have the assessment criteria. Prepare the financial statement, incorporating the relevant adjustment, and 1.2, which we can look around the financial statement, incorporating adjustment. And then we have the merit criteria, evaluate the purpose of preparing and which we usefulness of the sole trader and partnership financial statement. If you're addressing this, so it means you're meeting the learning outcome one, then lesson 2 learning outcome 2, lesson 3 learning outcome 3, and these are all the financial statement which we'll go through. There is all the indicative content, income statement, financial position, balance sheet, accounts, period, end of period adjustment, and the stakeholder, shareholder, those are used, these are the financial statement normally we prepare in our accounts, for our LO1. So we'll start. Thanks for joining. Those just joined today first lesson. Okay, so be able to prepare the financial statement for sole trader and partnership, and the aim of this unit really to develop understanding around financial statement, and always good to be look around the sole trader and partnership financial statement scale 1 to 10. Always good to be reflect how much we know already about the financial statement, indicative content, which our overall discussion will cover. Okay, so prepare the financial statement, which we can please, I'll give you the separate data for this, which we can. Sole trader is the 1-person business, and partnership 2 to 20, partnership act 1890, and limited company act 2006. We follow and we prepare accounts accordingly, and we follow the a local standard. Different types of the organization, non-profit organization, charities, they also make according to the Charity Commission Act. And that's which we can prepare these all the 4 types of financial statement. Those are crucial. So different types of organization, limited liability company, those have a limited liabilities. Of course, company can be in compliance with the national legislation, compliance with the accounting standards. Those are the crucial. And look around the stakeholder. The key purpose of the financial statement provide true and fair information according to. So partnership, which we said partnership act 1890 2 to 20, partnership deeds, written agreement between partners. That is the crucial element which should be followed. And that's quite good to be because end of the day financial statement should provide the financial information that help the stakeholder to make the financial decision, and financial decision is crucial for reporting. We have the Company Act 2006, which will carry on following. All the UK registered, the company must comply with the Company Act 2006. The director of the company must prepare appropriate, accounts, and look around, and thus, the Company Act account following the UK standard, international financial reporting standard account. And we can look around IAS, International Accounting Standard 1, which is about the preparation and presentation of financial statement. Limited liability of the partnership, please, which we need to be look around the company registered in the company house liability limited. can be, then of course their numbers, and especially accounting businesses and solicitor businesses, more LLP, limited liability partnership. Okay, always when you're dealing with the double entry, please keep in mind the debt click, the debit and credit rules. That's, double entry. When the asset increase, we do debit. When liability increase, we do credit. And always, follow these, the guidance clear. Increase in asset will be debit, increase in liability will be credit, increase in liability will be uh, credit, and decrease in liability will be debit. Income received, it will be increase will be credit, and decrease will be debit. We have to, if we need to reduce it. Expense will be debit. If the expense we need to reduce them, like a prepaid, if you have the things that maybe you record it first, play debit the cash, credit the insurance, but insurance was only for this year, is a few months, and the next year will be prepaid. When it's not, accrual basis, mean the income and expenditure should be recorded under the correct heading and going concern, the true and fair information, and all the, which we need to be. Depreciation is expense, and we need to be carrying amount and the cost in whichever the depreciation method. So please debit and credit, and we have to make the adjustment in the financial statement accordingly. So different depreciation method which we can use, the straight line diminishing unit production method. So please, types of errors which we need to be make adjust. Original entries error, reverse errors are the principal errors. Maybe we treat as a debit expense instead of asset supposed to be debit. So if we're putting the wrong categories, can't be traced, because the debit and credit is wrong, but it's not a principally right. You say expense actually was the asset. You bought a computer and you're saying expense of the computer. That's not asset. Can be anything you own which flow the future economics benefit is your asset. So those we need to be look around. The types of errors, it can be commission, it can be look around the error of these are, the account balances incorrectly, so we need to be, and we do the reversal of entries, and type of error need to be where there is adjustment. VAT, which we need to be look around the sale tax account, and we need to be look around the adjustment accordingly. So driving the missing information from incomplete record, which we can, those need to be adjustment entries. We need to be final. So when we'll do us, guys, when we'll do the assignment discussions, I'll go through the number of examples with you. And please, we have the handouts available, which is Kaplan handouts, and you have the BPP and Osborne handout. That's quite good, which is on our Google page, to use for them. And because most of your accounting background, and that's, which we can give you some activities which we can complete, those will help you to enhance. But keep in mind that click debit and credit, and the missing information which we can locate, by debit and credit. So gross sales, um, the gross profit, and then sales. So if we know the gross profit and the cost of sales, we can find the sales figure, because if it's a markup and margin, we can use the equations accordingly. So that's, the equation we have been given to find the missing figures, please. That's, which we can. Driving the missing figures from incomplete information. So please always think about the cost of sales, the goods. You do the reversal of the things, that will help you to find the missing information. That's quite good, which we need to be look around. Driving the missing figure incomplete information, like, cash bank and the bank reconciliation. That's why we're doing, and we can make adjustment accordingly. So please always good to be think about the accounting equation. If you do give the net asset is equal to asset equal to liability plus capital, but asset minus liability become net asset, and net asset always equal to equity figures. So if you don't know the equity figures, you can find the equity figures. So bank will be debit and credit, so then we can do the reversal of the things, that can be, because the drawing is the debit and the cash will be credit, because of course you draw the money for personal use, and it will help it will reduce your even capital as well, which we need to be you're withdrawing. So actually accrual and prepayment, because as the accrual concept, income and expenditure should be recorded. Always draw the timeline, please. When you're dealing with accrual and prepayment, think about which is belong to which year, because the accrual concept, income and expenditure should be recorded. Okay, this is the sole trader statement, which we can look around the sales revenue, please. If you have the discount received, there can be other income, but look around the cost of goods sales, opening inventory plus purchase minus closing inventory, sales revenue minus cost of sales equal to gross profit. If your discount receipt, that's other income minus other expenses. So you will get, profit you have before tax. And financial position, as also known as the balance sheet, shows asset, liabilities, and equities. So first, normally we can record, non-current asset. Then we can call current asset those are the short-term obligations, and the current asset short-term, their values carry on changing, and the liabilities, which is legal obligation, it can be non-term more than a year, and current less than a year, then the capital. That's the way we can okay, so please, the statement of financial position, that can be the layout which we can follow that will help, to achieve our objective of the organization. The key objective of the financial statement is to provide the true and fair information to the various stakeholders. So, so please, we need to be make sure, we provide the true and the fair information to the stakeholder in the financial statement. That's why we prepare, help, to achieve the key objective in the financial world. Okay, so then please financial statement, sale and the sale return to be noted, the cost of sale and comparing amount of the known and the financial statement, depreciation, receivable, and these are the adjustments which we need to be normally do. Inventories, of course, inventory should be recorded at cost, net realizable value, whichever is the lower, and those, adjustments should be make accordingly. And please, so I included the Osborne chapter 3, and the test is I included the link for you if you want to do some tests, to enhance your understanding, because please, it's good to be look around the Osborne chapter 3 3.1 to 3.7 question will help you to further enhance. 1.2, prepare the financial corporate relevant adjustment, which we can make adjustments like you will see the accounting of the partnership. When we have the partnership, sole trader and partnership, because the partner, the profit should be distributed to the partners, and we can look around profit appropriation account, which we can allocate the partners salaries and all these, which we can with the different layout, which we can use the profit appropriation account. Salary is the expense for the business, but individually the income. So those we need to be make adjustment accordingly. Sales commissions and adjustments, which will look more, adjustment these into when we'll do assignment discussion. So please, it's good to be look around these few examples. Those will help you to enhance your understanding. Statement of the financial position when we're looking, please. So always you have to look around how much partner A, partner B, but when is a sole trader, because the 1% business, that's just a capital and the capital account. So we can look around the proprietary interest, the capital, profit, and less drawing. Drawing is something you draw for personal use, and the capital account for the partners, which can be treated as the capital account A, B, and there is the increase or decrease, the drawing, we need to look around the goodwill, that's the key. Really, we can prepare the key account to show the separate each partners. We can make the current account is like accounts, it's been your money within the company that's come under the credit card, credit side of the financial statement. That's help you to prepare. And the drawing, which is debit side, interest on drawing the income for the for company, but not for individual. That will help you, that reduce their current account balance in the company. So these are the changes in new partners we can add in the partnership. We can make adjustment to if the partner are retired or partner died, not anymore. Those adjustments, which we can highlight in our financial statement. Goodwill, the reputation of the company, the old partner and the new partner, those we need to be look around and making adjustments. So please, I included some links there. Stakeholders mean anyone who has any interest in the business. It's called stake, and we can look around the stakeholders like a customer, supply. I included the link for you guys if you want to look around and few questions. 6.5 and 6.6, that's quite to explore, and that's the chapter 6 few adjustments. Okay, so this week, we'll look around. This lesson is about one, just awareness about the financial statement. The following lessons will go through in detail, explore about more the new adjustment. Thanks for attending and have a lovely weekend, and speak to you all during our next class. Thank you. Bye-bye.